Hey everybody, it's Jeremy from Trade Maestro. Let me ask you a question. Did you know that you can have fun in a bear market and you can actually make huge profits? We're going to talk about that in today's video, 3 strategies for bear markets. Let's go. Hello, everybody. It's Jeremy Whaley from Trade Maestro. Hope you're doing fantastic today. If you want to learn more, you can always check us out over at trademaestro.com. I want to address bear market strategies today, specifically 3 strategies for the bear market so that you can thrive and prosper during tough economic times. And you know, people, they get really freaked out about bear markets. They get freaked out when they see the market going down. And that's because they've been conditioned that if the market goes down, it's bad because you're losing money. And if the market goes up, it's good because you're making money. Well, that's the belief. But did you know it's possible to lose money in a bull market? And it's also possible to make money in a bear market. But in order to do that, we have to adapt. We have to apply some different strategies. The metaphor that I use for this a lot of times is seasons, like, you know, winter, spring, summer, fall. During different times of the year, we play different sports, for example. In the summer, oftentimes we're playing things like baseball and we're doing water sports outside and that kind of stuff in the summer because that's summer fun, right? That's what you do in the summer. You go to water parks, you do things to help you cool off because it's really hot outside and, you know, that's what you do. Well, what happens when we get to winter? When we get to winter, it's not very fun to be playing baseball in 3 feet of snow, and it's certainly not fun to be water skiing in 3 feet of snow. But what we can do is we can change it up. And so in the winter, what do? We bundle up, we go out and we play winter sports, or we play, winter sports, and we do stuff that you do in the winter. And that's the way we treat the seasons. And so we understand that as society, that just because winter's here, even though it might be cold and there might be snow outside, it doesn't mean we can't have fun. In the summer, even though it's hot, we can still have fun. And guess what? Markets are the same way. Markets are like cycles, or they're like seasons, I should say. Market cycles are like seasons. There we go. Put it all together there. Market cycles, economic cycles. So you can have an economic spring, an economic summer, an economic fall, and you can have an economic winter. A bear market is what we call an economic winter. It's when things start to die off. It gets really cold. Companies that aren't as good, they die off, they fall away. We clean up a lot of stuff, and it's actually a really good, healthy part of the market. But unfortunately, people, they freak out about it, and they freak out about it because of the way that we've been conditioned. So in this video, what I want to do is I want to talk about 3 bearish strategies that we can implement in a bear market so that you can actually have fun. And just think about this like it's snow skiing in winter, but for the stock market. All right, that's the best way to approach it. So I'm going to try to go fairly quickly through this, but I'm just going to warn you, it's probably about a 30-minute video, so we'll be here for a little bit. So let's jump in, let's get going. In today's session, what we're going to do is we're going to talk about how we thrive in the chaos. I've kind of already started priming the pump on that. We're going to talk about 3 bear strategies, and then specifically, we're going to address what you can do next. Now, before we get there, let me ask you, when you think about the bear market, where are you at on what I call the fear scale? Are you over here in freak out mode? You're 10, or are you over in Zen? Are you all happy and you're like, okay, everything's good. Everything's going to be all right. You're somewhere between Zen and freak out. And you know what? It's okay wherever you are. It really is okay. If you're in the freak out mode, that's fine. We're going to address that. If you're on the Zen side, fantastic. I want to share with you a quote from one of my mentors. And he used to say this. He used to say, Jeremy, leaders see the problem as it is. They see it better than it is, and they make it like they see it. Now, what is that talking about? First of all, leadership is not victimhood. Leadership says we're going to take control of something and we're going to actually go do something with it. So that's the first principle to understand. And then how do we do that? Well, we see the problem as it is. We see it exactly for what the problem is. And I've already started articulating that in the beginning of this video when I said that we look at economic seasons very much like the physical seasons of the year, winter, spring, summer, fall. And we just simply make adjustments. We adapt to the different seasons. So we see it as it is, and then we say we're going to see it better than it is. What is that talking about? Leaders see the problem as it is. We see it simply as seasons. We see it better than it is. We see the opportunities within the complexity of the seasons. Another one of my mentors used to say this. He used to say, the same wind blows on us all. What does that mean? It means that the same wind is blowing on everybody. Some people see it as a storm. Other people use that wind to propel their boat forward. They set their sail differently, and they use that same wind to propel their boat forward. Okay, same principle here. Leaders see the problem as it is, they see it better than it is, and then they go make it like they see it. It's talking about vision and then implementation. Well, we're going to apply that same principle here to the stock market and to trading. The world, whenever they see bad news, they tend to react this way right here. They freak out a little bit. The hippies on bad news, I just like the picture. Hippies on bad news are all zen about it. Leaders on bad news, what do? We're going to go conquer the world. Gung-ho, conquering the world. So let's talk about the truth. What is the truth? We're going to see the economic crisis, the economic chaos. We're going to see it as it is. So the truth about chaos. Number one, in chaos, great opportunities are born. There's great opportunities in chaos. I don't have a list of them all, but if you just look back at all of the chaos in economic chaos throughout world history and look at the opportunities that were born throughout that. For example, Monopoly, the game Monopoly, one of the greatest board games ever created. It was created in the Great Depression by a family who couldn't figure out how to pay their bills, and they created this game. And they ended up selling it, and that was the thing that rescued them. It was out of chaos. It was out of destruction that the very redemption came forward, okay? So understand that great opportunities come from chaos. The next thing you need to understand is we don't make money with bull markets. We make money with volatility. Now, what does that mean? Okay, because most people have been conditioned. We've been taught this by our financial planners. We've been taught this by schools of economy, colleges, universities. I mean, we've been taught this throughout most of our lives. When we think about money, people have been indoctrinated, literally indoctrinated, that bull markets are good and bear markets are bad. I want you to know, bull markets do not make you money inherently. Bull markets do not make you money. What makes us money is volatility. That is the movement, the price movement of the stock that you're trading, or if you're trading futures or Forex or something else, it's the volatility, it's the price movement of that thing that we're trading. So we don't make money in bull markets, we make money with volatility. And here's the other thing I want you to understand about chaos. When everyone else is in a panic, that's the ideal time to be buying. When everyone else is in a panic, that is the ideal time to be buying. So let me pull up a chart here. Let me show you kind of some ideas with pictures here. Instead of just words, we're going to use pictures. We make money when the market moves. That movement is something we call volatility. In a perfect world, you buy in the green circle and you sell in the red circle. Then you buy again in the green circle and you sell in the red circle. Now, here's the thing about this picture. You're not making money because of the bull market. The bull market happens to be the environment in which you're making money, but the bull market is not making you money. What's making you money is the fact that the stock is moving from one price to a different price. Okay, let's take another example of a stock here and take a look at this one here. It's hard to make money on a trade like this when you buy it and it goes from $12 to 14 and back down to 12 and back to 14 and back to 12 and back to 14. If you just buy and hold that, it's going to be very difficult to make a profit on a stock that does something like this, okay? So let's go back to the previous trade. We could buy it in the green circles. We could sell it in the red circles. Could we do the opposite as well? Is it possible that we could do something in the next 6 months? Because it took 2 years to go from, in this particular case, about $250 a share to $680 a share. It only took 6 months to destroy all that. So here's my question for you. Is it possible? What if there were a way to make a profit while the trade is falling in the same way that we can make a profit when the trade is rising? You might think to yourself, well, that sounds like a really great idea. I'm going to tell you there is. There are ways that we can take that picture, the one that I've moved away from here. There are ways that we can take this picture, and when the price is going from $680 a share down to $200 a share, we can make a profit on the price movement. I want to go back to the second principle. We don't make movement on bull markets. We don't make money on bull markets. We make money on price movement. That's the word we use for that is volatility. We make our money on volatility. So back to the question, what if there was a way to make a profit while the trade is falling the same way you can make a profit while the trade is rising? Well, that's exactly what we're going to talk about right now. I'm going to introduce you to 3 strategies. And I just want you to know that all these strategies are not perfect for everybody, but the principles are here. And in the end, what you're going to have to do is you're going to have to decide which strategies you personally want to implement and decide what's best for your trading and your trading plan and all of that stuff. But let's just talk about some strategies here for how you can make money in a bear market. Okay, so the first one I want to introduce you to, and I start here, even if you never use this strategy, I start here because this is the primary way, it's the primary function of how we make money in a bear market. And the technique is called shorting the trade or shorting the market. Basically, when we short, what we're doing is we're buying a stock after it's gone down, not before it goes up. You say, is that possible? Yeah, it is. Okay, so understand that when we buy a stock, we make money when the price goes up, right? That's a basic trade. We call that a long trade, by the way. When you buy a stock at, say, $100 a share, and you trade it up to $200 a share, you're buying it at a lower price, you're selling it at a higher price. That is a long stock trade. When we short a stock, we do the exact opposite. We just reverse the order. We start by selling, and then we close the trade by buying it at a lower price. We just invert. We literally reverse the direction of the trade. Okay, so let's go back to our chart that we were looking at here. On this trade, there was a $400 per share profit over a 6-month period of time. Yeah, that's it right there, $400. You say, well, I don't get it. I don't understand. How would this functionally work? Here's how it works. In the red circle, instead of selling to close the trade, we buy it in the green circle, we sell it in the red circle. What if we sell some more of it, and then we buy it when the price comes back down? I know this is hard for a lot of people to understand because you've been taught that you can't do this, but the truth is, in every free market, capitalist, economic trading system on the planet, this is a function. This is how trading works. You can do this with stock, you can do it with futures, you can do it with Forex, you can do it with options, you can do it with cryptocurrency, you can do it with every financial instrument. And some people, there's a bad connotation about shorting the market. They say you're betting against the economy. They say some people think it should be illegal. Some people think it is illegal. It's not. I promise you it's not. But some people think it is. But basically, the idea is that you're selling something when other people are buying it. And if you don't have it to sell, then you're borrowing it, you sell it, and then you cover that trade later. And we call that a short. You sell it short because you don't have it. So you're short, you're missing those shares. And then you buy it at a later price or at a later time at a different price. Okay. And hopefully it's a lower price. Now, functionally speaking, just let me address the function of short selling really fast. Functionally speaking, what it's doing is it actually provides liquidity to the marketplace. When you don't have short selling, we actually have a spike in prices. In fact, this has been a problem in the crypto market. Even though in crypto trading you can short it, there's not a whole lot of short trading in crypto. And what you see runaway bubbles. And then whenever it corrects, it's correcting 50, 60, 80% at a time. So you actually have really increased volatility when you don't have a good supply of short sellers. So short selling is actually a very important function in the market, okay? So let's just put that on the table right there. Short selling is a very important function in the market. Second thing about short selling is, what is it? What it is we sell a trade, a stock in this case, at a higher price, and then we buy it later at the cheap price. We just invert the trade. So let me give you a story here, because I know some of you are probably thinking, that can't be real. How would we do that? And other people would say, well, why would somebody pay too much for it? Well, they do that all the time, trust me. Do you remember whenever the iPads came out? Or just pick an electronic device, PlayStation, or any of these electronics, whenever they come out and there's a lot of demand for it, and then people rush out and they buy them, then there's other people that were camping out and they didn't get to buy it. Well, the people who were camping out and they didn't get to buy it, what do? They rush home and they go onto eBay and they try to find somebody who's willing to sell it. So the people who manage to get one of the early devices, they go home, they get on eBay, and they sell them for a lot more, right? When the iPad 2 came out, I specifically remember the iPad 2, they were selling in the Apple Store for what, $700, $800, maybe $1,000. And they sold out within 2 hours. Well, there was all these people in the mall waiting to go buy their iPad. They couldn't. So suddenly on eBay, there's a huge demand for iPads that people had bought on the day of, and people who bought them, they were selling them for $1,500, $2,000, $3,000 on eBay. and they just paid $800 the day before. I remember at that time thinking, man, I sure wish I had an iPad to sell, and I didn't. But imagine that was you. Imagine that you say, okay, yeah, I see the opportunity. People are willing to pay too much. You get the idea? People are paying $2,000, $3,000 for something that we all know is only worth $800, but they want it, and they want it now. So if only you could get an iPad and sell it to them, would you do that? You say, yeah, absolutely. I sure wish I'd bought one and I could sell it. Okay, so what if I said to you, whoever you are, Bob, Larry, Sue, Mary, whoever you are, what if I said to you, I have an iPad and I'll lend it to you? You said, really? You'll lend it to me? You say, yep. So you borrow it and then you go sell it at $3,000 on eBay. And then a couple weeks later, you come back and they're back in stock at the Apple Store, at Best Buy, wherever, and you go buy it for $800 and you bring it back to me and say, hey, here, I'm returning your iPad. What did you just do? You sold the iPad short. You sold it for a higher price. You borrowed it from somebody. I'm going to say I gave it to you because it's my story. So I give you the iPad, you borrow it, and you go sell it for $3,000 on eBay. A couple of weeks later, you go buy it back when the prices come back down to fair market price. You go buy it back and you give it back to me. That's what selling short is. That's exactly what it is. You say, well, who would lend me their shares? Don't worry about it. The broker does that. Okay, so the broker is the person who you're borrowing the shares from. They facilitate all of this. All you have to do is understand functionally what's happening. You're borrowing some shares, you're selling them at a higher price, and when the price comes down, you buy them back at a lower price. That's how you make money in a bear market. The end. Okay, now functionally you understand what I've just explained, I think. Okay, you may not know how to do it, but in theory kind of understand it. Okay, so now the question then becomes, is it possible? Is it really possible to have timed this trade? Is it possible to recognize that this trend is happening and turn around and sell at a higher price and buy back at a cheaper price? Is that possible? Well, that trade that you were just looking at, which I'll go back to that slide, this trade right here is Netflix, okay? And it's a pretty recent chart on this. It's a couple weeks old, but it's a pretty recent chart. I want to pull up right now my charts on Netflix because this is an actual trade that we did. We did this in our Sunday night profit picks class, and I'm going to show you some of the entries that we have taken. Now, I don't always leave all my entries on here because they clutter my charts up, but I have a few that are on here. And the one that I really want to draw your attention to is right over here. See if I can get my pen going here, draw your attention to this. It's right in here when Netflix was $597.97. That was our first short entry on Netflix. This was back in January of this year, January 2022. We started selling Netflix at $597. And within about a week, we were at our first target, which was $5.50. People made $40 a share, and most of my students were ecstatic about that, but the trend wasn't done. We had other entries along the way. After this big gap here, we targeted where it would go next. We actually targeted this double green line down here. Then, of course, we gapped down to that line, and now we still have some future targets for where this trade could go. Okay, so I'm not going to go in and dissect the trade itself. I just want to let you know that, yes, it's possible, and we did it. We did it. And it's not the only one we've done it on. We've done it on a ton of these trades over the last year or so, really since November of last year when the market started topping. And so, yes, we can time it. Yes, we've got the techniques to do that. Yes, we have the tools to do that. What I want you to understand is it can be done. I want you to understand functionally what's happening conceptually here, even if you don't know how to go do it. We're selling at a higher price, we're buying back at a lower price. Okay, so now you understand it can be done. You understand the strategy of what's happening. That is a short sell in the market. And that's the first strategy of how you make money in a bear market. All right, now let me teach you my second strategy. And I have to teach the first one first because that is, on a functional level, that's how you make money in a bear market. The way you do it is you sell something and you let the price come down and then you buy it at a cheaper price. That's how you make money in a bear market. Not everybody's comfortable with shorting the market, and that's okay. I'm not saying everybody should be comfortable with shorting. And if you're comfortable with it, great. That's a strategy you can go implement. If you're not comfortable with it, then I've got some other techniques. But from a functional standpoint, you still need to understand what's happening. We're selling at a higher price and we're going to buy back at a lower price in some way, shape, or form. So let me show you how that happens. Okay, so what I've shown you so far, I've shown you the basic strategy of shorting, and I've shown you that yes, we can time it. It is possible, and we do it. That's what I've been teaching people to do since the last financial crisis in 2008, and I've taught my students at Trade Maestro how to do it, and I can teach you how to do that as well. So don't worry about can we time it. I promise you we can time it. Okay, guarantee that part. Now let's talk about what other strategies could we use in case you don't want to be shorting the market. So here's the next strategy that we could use. We could actually buy put options. Now, put options, we get into options trading here. It's a little bit different. You're not buying a stock. Instead, you're buying an option. You say, what is an option? Well, let me explain it really fast here. Options give you the right to do something. It gives you the right to either buy a trade or the right to sell a stock. In other words, it gives you a choice. Now, why would you want an option to do something? Well, because number one, it's a way to leverage your cash. That's the biggest reason people use options. It also doesn't take as much capital to do it. So it's a lot cheaper to use options. And some of the risks that are associated with selling stock short are not associated with buying put options. So what a lot of people do is they like to buy put options instead of selling short. Because when we buy a put option, what we're doing is we're giving ourselves the right to sell short without actually selling short, and we can make money on that opportunity. That's what put options do. Put options give you the right to sell the stock at a higher price. So instead of actually going and shorting the stock, we're just going to have the right to do it. And then if the stock goes down, then we say, great, I have the right to do it. I'd like to exercise that. I'll go make my profit and I close it all out and we're all good. Everything's happy. Okay? Put options make money when the stock goes down. It's that simple. That's all you have to understand. You don't need to be an options genius to understand what I'm teaching you right here. I can teach you options separately. You don't have to understand all the different types of options. You don't have to understand the strategies or time decay or any of the crazy stuff. You don't need to understand that. What you need to understand is, functionally speaking, we can make money when the market goes down by shorting the market. If we don't want to short it, we have a substitution for that called options. And the put option is a tool we use for that. And basically, when the market goes down, the put option is going to go up in price and you can make money with it. So what if, go back to our example here, what if instead of shorting the market, what if we had the option? What if we had the right to sell it higher after it went down? So you're not even doing this without knowing what's going to happen. You already know. You already know that before you were to ever exercise a put option, if you even chose to do that, you would already know that the price had gone down. So you already know what the money is. Guaranteed. It's done. This is why we love options, because what options do gives us the right to do something without having to go do it. We can see if it plays out. It takes a very little amount of money, relatively speaking, to do so. And then we can make all that $400 per share profit on the way down. Incredible, right? I want you to know about this strategy. Put options are one of my top 3 go-to strategies for trading bear markets. I use put options all the time. My students use them all the time. Okay, it's something that, yes, you can do it. I've taught thousands of people how to do it. It's not scary. Kind of like shorting. People who have this aversion to shorting. They're like, oh, it's complicated. It's scary. No, it's really not. Then people talk about stock options. They're like, oh, it's really complicated. It's really scary. No, it's not. It's not. This is just, it's just how the market works. Okay, so let me teach you another strategy here. What if you're averse to shorting the market? What if you're averse to using options? Let me give you my third strategy. And this is another strategy I use a lot. A lot of my students are using this one right now. It's called inverse ETFs. So to understand this, let me first teach you what an ETF is. An ETF is an exchange traded fund. What is an exchange traded fund, you might ask? Well, I'm glad you asked that. An exchange traded fund is like a mutual fund, but it trades on the exchange like an individual stock. So if you're familiar with mutual funds pool people's money together. They buy a basket of securities and you own it in a fund that is mutually owned by a lot of people. That's what a mutual fund is. What if you took that fund and instead of going into the fund through your advisors and the people who facilitate mutual funds, instead of doing that, What if you could go buy that mutual fund on the stock exchange just like you buy Apple or Amazon or any other stock? That's what an ETF is. It's a fund, like a mutual fund, but it trades on the exchange just like a stock, which means anybody can get into it. It's very easy to get into. You can buy it, you can sell it, you can do anything you want really easily on the exchange because it's an exchange traded fund. You might be thinking to yourself, brilliant. And if you thought that, you would not be alone. ETFs are so popular since they've come out about 20 years ago. ETFs are so popular that there's actually more ETFs being traded right now than there are actual stocks. Okay, thousands of different ETFs. There's an ETF for everything. So yes, it's a great idea, and that's why everybody loves them, because they give us all sorts of features and benefits that mutual funds didn't do it. So here's my hint. It's just basically way better than a mutual fund. Okay, so if you're familiar with mutual funds, you're going to love ETFs. Now, let's go a step further. One of the things that the Securities Act of whatever year it was, 1935, 1936, came after the Great Depression. There was a Securities Act that they passed that said that fund managers could not sell individuals' money short in a fund. They couldn't do short trades in a fund. That's what the law says. They wrote that after the Great Depression. So individuals like you and me, who are just normal, everyday folks, they could not get into a short trade and trade the downside of the market. They didn't allow it. Sounds like the government, right? You say, well, who could do it? Only the elite. If you had enough money, then you were considered a sophisticated or qualified investor, and now you could invest in hedge funds, and the hedge funds were able to sell short, but not a regular mutual fund, not a regular fund for everyday regular folks. ETFs solve that, because what an exchange-traded fund does is an exchange-traded fund owns something. And there are types of exchange-traded funds that own an inverse or a short position. So instead of owning the stock, they actually shorted the stock. What happens if you short the stock and the stock goes down? The fund goes up because the funds are going up because you're short. Now, you don't have to short the trade. I want you to understand this. This is the only tool that I know of that you can buy it just like a stock. You own it just like a stock. And when the stock market goes down, these tools go up. Isn't that awesome? So an inverse ETF, an inverse exchange traded fund, goes up when the market goes down. Let me show you how it works. Look at this right here. It's so cool. On the bottom, you see SPY. This is the S&P 500. You see when the market's going down, look directly above it. This ETF, SDS, that's an ultra short. It's an inverse ETF that trades the SPY, trades S&P 500. Okay, when the S&P 500, bottom part of the screen here, when it's going down, what's happening above it? The SDS trade is going up, up, up and away. Wee. So what do we have here? We have an opportunity. You can do these in your IRA account. You can use this in many of your 401ks accounts. You can certainly use this in your self-directed trading accounts. But you can use this, and you don't have to be short. You don't have to carry margin. You don't have to do all the stuff that short selling requires. You don't have to go learn options. There's so many things that are so simplified just by using inverse ETFs. So anybody can do it. There's no reason that you shouldn't know how to do this. Okay, let me give you some benefits of the ETFs. Number one, it trades like a stock. You're easily in. You can easily get out. You can trade as many times a day as you need, unlike a mutual fund. A lot of people don't realize this, but with a mutual fund, there's rules. You can only go in certain times a day. You can only get out certain times a day. Sometimes you have to hold them a certain period of time. I helped my dad move some money in his retirement account just maybe 2 or 3 weeks ago, and there was a penalty on it. Once you moved the money, you had to hold it for at least 30 days. You could not move it again for 30 days. What can happen in 30 days? Well, a lot of stuff can happen in 30 days. With exchange-traded funds, with ETFs, you don't have any of those rules. You don't have to do that. Okay, with an ETF, you can day trade it if you want to. I'm not saying you should. I'm just saying you could. You could buy it multiple times a day if you wanted to. It trades like a stock. In addition to the ease within which you can get in and which you can get out, you can be long in an ETF. You can own it, or you can even short the ETF if you want to. Fantastic. Like I say, you can use it in your individual self-directed retirement accounts. There's so many tools and so many ways that you can use these ETFs. Okay. So again, just coming back to this picture here, this really tells everything. While the S&P has been going down, look at SDS, it's been going up. And if you looked at the starting price for this, when we first started buying SDS, we got in around $35 a share. It's at 50. So what are we up on this one? You know, $15 on 35. It's, you know, about what, 70%, 75% in 6 months. How many of you are up 75% in the last 6 months? You look at SPY, what happened to SPY? It's down 25%. So if you're like most people are holding in their retirement account and they're just watching it go down. But if you're using an inverse ETF like this, you're actually making money in a bear market. It's my third strategy. Now, I've just shared 3 strategies with you. Okay, I shared shorting, and I had to share that because you need to understand how the market works. I actually don't short a whole lot. I don't directly trade short shares very often. Sometimes I do, but not very often. The second strategy I shared was buying put options, and I do that one a lot. Okay, we use that one all the time. The third one I shared was using inverse funds. We do that a lot. This trade that I just shared with you on SDS, there's another one on QID and on DXD. We've been in all 3 of them really since February of this year. So my students have been making great money on those. Real money trades, making money while the market goes down, not even having to short anything. Those last 2, buying puts and inverse ETFs, those are 2 of my favorite bear market strategies. I have a third bear market strategy that I use a lot. Okay, now there's more than one. I mean, I'm sharing, okay, I know this gets confusing. I'm sharing 3 strategies today. One of them I'm not sharing, but it is my third favorite strategy. And that one is a combined strategy with options. It's an option spread strategy that I use. I have 3 go-to bear strategies that I use. And I'm saving the spread strategy because I don't want to overwhelm you. But what I want you to take away from this video is I want you to understand in a bear market, it doesn't have to be scary. I want you to understand that in a bear market, instead of being freaked out, you can be on the Zen side. You can actually have fun in a bear market because just like in winter, we can move over and we can trade, we can play winter sports. In a bear market, we can move over and we can trade bear strategies. And I've shared 3 of them with you here. I kind of told you about a 4th strategy, the spread strategies. There's a lot. There's actually a lot of different bearish strategies. In fact, there's about 12 that in various capacities I teach. I use 3 of them myself primarily. Sometimes I use others, but there's 3 that I really use. And there's a strategy for you. I think probably for most of you, it's one of the strategies I gave you today. That's why these are my 3 bear market strategies. Okay. The reason I use these 3 is because for 95% of you watching this, selling short, buying puts, or inverse ETFs is going to be your go-to strategy. That's what you need to know. One of those 3. Some of you might be a little more advanced. And, you know, if you're more advanced, then we can talk about spread strategies in a future video. But for most of you, it's one of these 3 strategies right here. And when you understand those strategies and when you're ready to implement them, guess what? Instead of being on the freak out side, you can move yourself over to the Zen side. And how cool is it to be Zen in the middle of a bear market? That's what everybody wants, right? Be all cool and chill, making money in a bear market. That's what all of you need to do, okay? So what are the next steps for you? Well, let me just kind of give you a quick punch list here. And these are, you know, I mean, I don't have a better way of saying next steps. Do a little self-assessment for yourself. What do you need to do? For some of you, you say, you know what? I already know what to do. And if that's you, if you already know what to do, if you already know how to short the market and you already know how to buy puts if you want to, or if you already know how to do inverse ETFs, then great. That's what you need to do. You know exactly what to do. I've just shared with you the tips, okay? Some of you are, you know what to do in the strategy, but you don't know how to time it. So you really need to learn some more. Okay, so you know, everybody's in a different place in their trading journey. I don't know where you are. That's why we're having this little self-assessment. But if you know what to do and you know how to do it, then go do it. That's your self-assessment. For others of you, when you look at a self-assessment, you're like, well, I'm just going to wait and see. Let's just see what happens. That is not a good choice. For most of you, to be candid, most of you need to just learn some more stuff. And it could be timing, how to know when to get in, when to get out of the trade, what your target should be for the trades. For some of you, it's the strategies. I don't know. All of you are in different places. Maybe it's the risk management piece, because that's a big piece to surviving a bear market, is managing the risk. Those are really the three pieces of trading. Everybody I teach how to trade, I teach 3 steps. Number 1 is the analysis, knowing when to get in, when to get out, how to time the market. And I showed you just a little bit in this video that yes, we can time it. We can absolutely time when to get in, we can time when to get out, and we also can identify if we're in a bull market or a bear market. And that's pretty well known. That's easy to do. I mean, you don't wake up knowing how to do it, but you can learn how to do it, okay? And that's what I teach you how to do. Second technique is the strategy. So once you've identified which direction the trade's going, you've done your analysis, now we need to apply the right strategy. And you're either going to have bull strategies or bear strategies. And there's different techniques for both of those. And then the third piece to learning how to trade effectively is your risk management. Those are the 3 pieces. That's it. Analysis, strategy, manage your risk. And if you can learn those 3 pieces, guess what? You can trade any market. Bull market, bear market, sideways market. There's even strategies for sideways markets when the stock's going sideways doing nothing. So there's a strategy for everything. So you just have to decide, what is it that you need to do? Do you already know what to do? Great, go do it. Are you going to wait around and see what happens? Probably not a great idea, but you're welcome to do it. Time to learn some more ASAP. Probably for most of you, that's what you need to select. And maybe for some of you, you just say, you know what, none of the above. I'm just not interested. Okay, that's cool. What if you are the learn more ASAP? Well, for you, I'd like to introduce you to the Trade Maestro membership. This is what I designed it for. I share it with everybody. Let me teach you how to do this. Let me teach you how to do it the right way. I've got a monthly membership. You can cancel it anytime. It's very affordable. And, if you try it for 30 days and you're like, I really don't like this, you can just cancel. It's not a big deal. But most people don't do that. Very few people do that. Most people, whenever they join the membership, they stay members because they're getting so much value from it. You say, what kind of value would I get from it? Well, number 1, we do live weekly analysis every Sunday night. I shared with you this trade on Netflix. This is one of our trades that we did back in February. We've actually updated it many times along the way, but that was one of the trades we did back in February. I had students, most of my students sent me some sort of email that said something to the effect of, I paid for an entire year of Trade Maestro with this one trade. And that's what happens. Not every week, it's not every week that we have extraordinary trades that pay for an entire year's worth of Trade Maestro. We try, but it doesn't happen every week. But you're going to find trades. We're going to find winning trades every week, some sort of winning trades. And we're going to set those up and we're going to share those with you. You'll see the analysis. You'll see how we go through it. In addition to all that, in addition to the weekly, we call it profit picks that we do on Sunday night. In addition to that, you're going to have access to the recorded training library so you can learn all these techniques. Because I'm sure as you look at this, you're like, oh, that's overwhelming. I don't know how to do that. How does he know that it's going down? I teach you. That's how, okay? So you have access to the recorded training library. You can come back and you can watch it anytime. I've got a training program called, it's actually a challenge that I did, 21-day challenge, Pick Winning Stocks Challenge. Guess what that teaches you to do? All this stuff that I'm teaching you. So in just going through that one training program, I charge $500 for it, but I include it in this membership. And just going through that training, you're going to learn my entire trading techniques. And then you'll be able to implement that. So you get the Sunday night weekly analysis, super, super valuable. You get the recorded training library. And we also do twice a month, we do group coaching. So you can come in, ask any question you want. All right. And it's just a great way for you to learn, great way for you to absorb all the stuff that's going on in the market. And you can learn from other people because we kind of have our little Trade Maestro community. Okay. So it's a really, really cool way for you to just take your trading to the next level. Now, as a special bonus, I actually have an offer for people who do the annual membership. So you can do the monthly membership for $97 a month, cancel anytime. Do an annual membership and you can save. You save 2 months when you do an annual membership. So you pay for 10 months, you get 12. So you save 17%. But as an extra bonus, I'm also including 2 additional trainings. A training on TradingView, which is the charting software that you saw me using. So I have a complete training on that. It's a $300 value. I'm including that for free as a special bonus. And for those of you who are interested in trading crypto, oops, I moved too fast here. For those of you who are interested in trading crypto, I'm also including as a bonus for the annual members the brand new crypto accelerator, which is a $997 value. So we're including that as well as a bonus for the annual members. So yeah, it's a really, really great offer. A really great deal. All right, how do you do it? Well, all you have to do is go over to trademaestro.com, get yourself enrolled, click on the, well, right there on the homepage. You can either click on the Pick Winning Stocks Challenge, get started that way, or you can start with the membership. Just click on it, sign yourself up, and start getting the emails and show up for the Sunday night classes. We'll send you the links and everything. Get yourself logged in, start watching the videos. That's how you do it. So if you have any questions, if you need some help on any of this, please feel free to send me an email, help@trademaestro.com, help@trademaestro.com, and I will be happy to answer any questions. I'm going to put links below the video here so you can get over and get yourself signed up for the membership. And again, you can cancel anytime if you decide it's not for you. So no big deal. But here's what I know is for you. What is for you is making money in a bear market, making money in a bull market. How would you like to feel like you're prepared for every market condition? That's what our training allows you to do. So get yourself signed up, try the membership if you want to. If you want to just try the Pick Winning Stocks Challenge, you can do that as well. But get yourself signed up and take the next step so that you are not freaking out in a bear market. No reason to be in freak out mode. All right. Listen, if you're not subscribed to our YouTube channel, please do that as well. Get over to YouTube, sign up for that, or over on Facebook, wherever it is that you like to do social media, so that we can share all these things with you and help you take your trading to the next level. All right. Thanks for watching. And until next time, happy trading to all of you. We'll talk to you soon.